Welcome. In this video, is XCN coin preparing for the rise? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we take a broader look at the chart, we can observe that the price action has been trapped within a defined downward structure for quite some time, and in order to clearly shift its direction upward, it first needs to break through the descending trend line that has been creating this pressure. This descending trend acts as a structural barrier that tests investor psychology, creates some uncertainty in the market, and confines the price within a certain range. However, this is not a signal of perpetual weakness. On the contrary, descending trend lines in technical analysis often serve as precursors to significant breakouts. The reactions and volume movements observed each time the price touches this trend line actually suggest that the market is approaching a decision point. In technical analysis, descending trends are typically drawn by connecting peak points and are used to visualize the downward bias in price. A breakout above these lines indicates that selling pressure is starting to weaken and that buyers are becoming more active. The fact that the price is currently moving close to this descending trend line suggests that a critical breakout may be near. If this trend line is broken to the upside, it would not only represent a technical resistance being surpassed, but also signal a significant shift in market psychology. At this point, investors should understand that this descending trend line is not just a graphical element, but a visual representation of the market's current supply and demand balance. The price may have been pushed down multiple times along this trend line, but with each touch, buyers begin to gain strength. Especially in recent times, shallower pullbacks and rising volume may indicate that sellers are losing their grip. In such scenarios, a breakout above the descending trend line increases the likelihood of sharp upward movements. If the price succeeds in breaking above this trend line, it becomes clear that this is more than just a visual accomplishment. In technical analysis, such breakouts are often supported by strong volume and are typically followed by more sustained rallies. After such a breakout, the price is expected to first target previously tested high areas. More importantly, a move beyond those levels could boost investor confidence and trigger new market participation. This creates the energy and momentum needed to push the price to the next level. Psychologically, these kinds of breakouts carry great significance. Investors who have been trading within a long-term downtrend often interpret the break of that trend line as a signal that the downtrend is over, prompting them to enter long positions. This brings a strong wave of liquidity into the market. Especially those who had previously hesitated may start taking positions once they see the trend break, providing further support to the price. It's important to remember that every structure in technical analysis represents a cycle. The purpose of descending trends is to inform the investor of the current state and indicate potential breakout points. While this descending trend may currently be applying pressure to the price, historical examples show that breakouts from such trends are often followed by strong and sustained upward movements. Additionally, when this breakout occurs, it won't just lead to a retest of previous resistance zones, but it will also pave the way for a potential support-resistance flip. In other words, the descending trend line currently acting as resistance could start functioning as support after the breakout. This is a highly positive development in technical analysis, as a successful retest and bounce from this line would confirm a change in market direction. But we cannot make decisions based solely on trend lines. Let's also look at other metrics. Stay tuned. When we examine the chart, a very notable structure stands out. The inverse head and shoulders pattern, which is recognized in technical analysis as a strong reversal formation, is clearly forming on the chart. This pattern typically signals the end of a downtrend and provides strong clues that an upward movement may be about to begin. Currently, the price action appears to be in the final phase of this formation, meaning the price is in the process of forming the right shoulder of the inverse H and S. This is a significant technical development, as the completion of the right shoulder may lead to an upward move toward the neckline, and a breakout above that neckline could trigger a strong rally. Inverse head and shoulders formations suggest that the selling pressure in the market is gradually decreasing and that the buying side is beginning to gain strength. The left shoulder is the initial reaction during the downtrend. The head represents the lowest dip in the pattern and is the point where selling pressure peaks. However, what's notable is that after reaching this low, the price begins to recover and doesn't return to the previous lows, indicating a weakening of bearish momentum and the formation of a structure preparing for an upward move. At the moment, the price action is working on the right shoulder of the formation. Technically, the completion of the right shoulder usually signifies that the prior downward pressure is losing its strength and the market is searching for a new direction. During the formation of the right shoulder, if the price makes a higher low, it further demonstrates that buyers are becoming more aggressive and sellers are no longer as dominant. This is a positive sign for investors. Once the right shoulder is complete, attention shifts to the neckline. A breakout above this neckline would confirm the completion of the formation and signal a bullish move. The neckline is typically drawn by connecting the peak of the left shoulder with the peak that follows the head. When the price reaches this level, it often encounters some resistance. However, if the breakout occurs with strong volume, it is considered the beginning of a bullish trend. In technical analysis, such breakouts are seen as confirmations of a trend reversal. In inverse H&S patterns, the target is often calculated by projecting the distance between the head's lowest point and the neckline upward from the breakout point. This gives the expected potential rise and defines the pattern's target level. In the current scenario, the price being in the process of forming the right shoulder presents a major opportunity for attentive technical analysts. If the price completes the right shoulder and makes an upward push, breaking the neckline with strong volume, a significant upside move can be expected. These kinds of formations typically represent the crossing of a psychological threshold. Investors who have been under prolonged bearish pressure often gain confidence and begin entering long positions after such a breakout. This buying activity helps push the price even higher. Furthermore, the reliability of this structure is enhanced if it is supported by volume behavior. Especially if there's a spike in volume during the neckline breakout, it confirms that the breakout is genuine and not a false move. This encourages both short-term and medium to long-term investors to start building positions. From this perspective, the inverse H&S formation on the chart is not only technically important, but also helps restore investor confidence on a psychological level. Inverse head and shoulders patterns often lay the groundwork for prolonged rallies. Especially when formed on higher time frames, these structures can be highly effective in signaling trend reversals. The current pattern on the chart is progressing in a very clear and symmetrical manner, making it critical for investors to monitor it closely. Considering that the target of this formation is projected by moving the distance between the head and the neckline upward, it is highly likely that the price will reach this target after a confirmed breakout. Taking a closer look at the chart, we can observe that a noticeable and highly significant rising trend line has formed on the RSI indicator. Such rising trends provide extremely important clues to the overall momentum of the market and allow traders to recognize potential changes in direction in advance. This rising trend line drawn on the RSI shows that the underlying strength of price movements is gradually increasing, and market participants are now more inclined to open more buy trades. This trend line signals a positive development not only in the RSI, but also in the overall momentum of the price. Currently, the RSI line has once again touched this rising trend line. These touch points are critical for technical analysis because the RSI usually bounces to the upside every time it touches this trend line. This indicates that the market sees this trend line as a sort of rest and recovery area and is preparing the ground to regain upward momentum from here. The same scenario seems to be playing out right now. The RSI has approached this support line again and reacted upwards. This is technically a very positive signal, indicating that the price may move more strongly upwards in the coming period. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.